Good morning and welcome back to Almus Market Mornings. Yesterday was a slow day, especially since it was a US holiday on account of Labor Day, but there's plenty of interesting market moves that's happening. Starting with USDINR, which for a change saw some weakness, closing lower below 88.60 levels. And for the last few days, if you recall, the pair was sticking to 88.70 levels with no major movement. Dollar index overall remained slightly weaker, and gold has continued a bit of its rally yesterday. Good morning, JK. We are seeing some rupee appreciation now. What's behind this, you think?
Good morning, Swaraj. Uh, yeah, obviously, market has really found that cap at 8880, 8870 now. In fact, for the USDINR and RBI has been consistently intervening. But throughout the day, we've been hearing about progress on trade talks between India and US. There is no official confirmation of a trade deal being signed, but there are reports, emerging that US will be cutting tariffs on India by a significant percentage, and that has been doing the rounds. And then we also had the exit poll results from Bihar election yesterday, the last phase of voting being completed, and that shows the ruling party. Or rather, the coalition at the center winning the election once again. So the sentiment has definitely improved, and technically also stocks have given a very good rebound from the recent lows, sustaining those gains as well. Although we don't see the FI numbers turning positive, but overall we do see sentiment improving both in the stock market and in the currency. We in fact for a change saw some customer offers around 8870, and it did not require RBI to force down the USD-INR, and we saw a trade up to 8855 in onshore market, and offshore market followed it up with some drop to 8845. However, since there's no confirmation yet on the trade deal, market is slightly being cautious and trades about 8850 now. But overall, it does look, the global sentiment is also improved after U.S. government shutdown is almost ending. So that gives some additional support to the Indian markets as well. In the global markets, yes, U.S. was shut. But the stock market was open, bond market was closed. Therefore, the bonds have seen some yield drop in the Asian market today, which is a reaction to the uh, job cuts at record 153,000, which was announced, late on Friday. And of course, yesterday there was also data from the ADP institution, which has now started to publish weekly frequency estimate of private sector employment known as NER Pulse. And this is actually a 4-week average, moving average of private payroll employment changes. Of course, this is newly introduced and it's a high frequency private sector employment data, which can help in, some analysis, although the relative reliability will have to be established. Now, the number published by them shows an average of 11,250 jobs per week being lost in the 4 weeks ending October 25, 2025. That also, in the absence of any other data, market was reacting to that. We saw, the yields, yields, in fact, drop in other regions, expecting drop to regions, US yields in the Asian market today. And also, the dollar also lost a bit, euro trading as high as 1.16. There was also the labor market data from UK, which was quite underwhelming. The jobless rate rose to 5% in 3 months through September, where the poll was at 4.9%. The previous number was at 4.8%. Additionally, even the wage growth was slowing. And one of the reasons why Bank of England has been cautious about cutting rates is the high level of wages that they have been pointing to. So there was an all-round weak number in UK job market, so that actually boosted the chances of a rate cut by UK in December. In fact, some investment bankers are now looking for Bank of England to deliver 3 cuts one each in December, March, and June. This is contrary to two cuts that was being expected earlier. On the stock market, as I said, the US stock markets were open yesterday. For a change, it was the Dow which performed. Seems to be some sort of a sector rotation that's happening in the US markets as technology shares were on the losing side, and the broader economy stocks represented in Dow Jones Index gained substantially, and the Dow almost hit the previous all-time high above 48,000. One of the reasons the tech sector was subdued was that large investors were seen selling the big cap stocks in the tech sector, and I would just put it down to some sort of a profit booking ahead of the year end. And although the valuation concerns do remain, this is not so it's not does not seem to be emerging trend, but definitely a broad economy stocks are likely to do better as we look at the technicals. They don't seem to be as overvalued as the tech index. So we don't have too much cues to go from the yesterday's events. However, today we have the inflation number from India, and that is going to come at 0.48%, and that's a record low that we have seen for Indian inflation. And so we just wait to see what the components of the inflation are, and whether it's just a base effect, or it's also a sustainable influence on the inflation that is working now. If that is so, then we may expect policymakers move in December, more certainly, for another quarter% cut in the rate. So all in all, we are looking ahead to the shutdown being ended after the House meets for a vote. And once that is done, we will have all the pending economic data from US that has been held back for the last 40 days. And first up will be the September unemployment data, which is likely to be rather, it is expected to be announced on November 17th, and that actually probably will keep the markets on a slightly uncertain phase, because it can, when you see unemployment data being published for 2 months in a quick succession, and also the inflation numbers, a lot of uncertainty will rule where the number will be, how to read that, and what policy implication it will have. So the next 1 week will be on how what the US numbers come out to be, and of course Indian scenario for the trade deal, the poll result, and also the inflation number. Thank you.
Thanks, JK. And just quickly summarizing, when it comes to rupee, we saw some appreciation yesterday, and there is sentiment building up that there will be some sort of a trade deal with the US coming up. There's nothing official about it yet, but definitely something on the cards, a bit of the news papers sort of releasing that kind of articles. But as I said, so no confirmation from both the sides yet. Uh, Next up, of course, the Bihar election exit polls. It's favoring the ruling party's coalition, and that's providing some positive sentiment for the risk assets here at home, and also keeping the rupee slightly on the stronger side. But since there is no confirmation on the trade deal, when it comes to USDINR, it's still trading cautiously around 8850. But let's see how the moves sort of pan out. On the global markets, ADP institution has created and released a new private sector employment index called NER Pulse. Now, this is a new data series, and basically it is showing around 11,000 weekly job losses in the US. And when it comes to the stock markets, the technology shares were on the losing side yesterday, but industrials performed well, Dow doing well as compared to the Nasdaq. Uh, Things to watch out for. Today's India inflation data expected at 0.48%. It's at record low, and maybe further analysis of the print would give some comfort and also space for the RBI to cut rates more. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of uploads.